If you spent years successfully managing your own investments, do you really need a financial advisor? That's the question that Bob, one of our listeners, sent in, and we're going to break this down today and talk through, why even experienced investors might benefit from professional guidance and when they're probably fine on their own. We'll talk through all that coming up with Lee Perkins.
Welcome to the My Retirement Clarity Podcast, where our goal is simple: to help you close the gap between what you know and what you implement. The team at J.L. Perkins Wealth Management does this by helping good people make great decisions so they can enjoy an amazing retirement. And now, here's your host and financial advisor, Lee Perkins.
Well, great to have you once again on My Retirement Clarity. I am Ben George with Lee Perkins. Leah, this is a good one that came in from Bob, and I think we can kind of work through it today. But I know a lot of people do it themselves these days, right? I'm sure you come in contact and in communication with a lot of people that like to just do things on their own.
Yeah, we occasionally run into the DIYer. Some are better equipped to do it than others. And so, yeah, I think today's topic will be a fun discussion to have, because there's a lot of people out there listening right now to this podcast that just want to glean information. They listen to this one. Maybe they listen to others. They want to try to pick up some tidbits that they can use. So, yeah, today's will be a good discussion, I think.
Yeah, we want to try to answer that question, whether or not working with an advisor, is it just an extra expense, or could there actually be some real value added in that relationship? We'll do that again with Lee, as we always do. And if you haven't been in touch with Lee before, it's very easy to do. Go to talkwithjlp.com. You can schedule a meeting there, talkwithjlp.com. All right, so here's Bob's question. Let's begin here, Lee. He says, I have an MBA, and I understand investments well, so I've always handled my portfolio myself instead of having any professional help. And I've always done well. So in your honest opinion, is there really any reason for me to work with an advisor?
Bob's education, and again, we'll preface this by saying I don't know how old he is. He could be 32 or he could be 52 or 62. I have no clue. He's clearly well educated, and he says he's always done well. So if I were to talk to Bob, I would say, okay, how do you define doing well? Because my guess is Bob's definition of doing well is his returns have been good, because truthfully, this is how people measure their success when they're trying to be their own financial advisor. Is, I've got great returns. Why do I need to hire an advisor? And we'll kind of get into this, as we go through the show today. There's a whole lot more than returns. So if I were asking Bob, okay, so how are you measuring success? And if you're measuring success simply by the returns that you get year over year, you're probably missing out on some things.
Yeah, there's no question about it. So, look, Bob he's confident in his investment skills, and rightfully so. He's done well managing his own portfolio. But beyond investments, where are some of those spots where advisors typically provide value that, DIY investors maybe don't think about?
There's just so much more to this than simply investment planning. I had a buddy of mine last week. He's been asking me for several weeks now about a particular company that he heard on the news. He may have heard this from the president. And so he said, hey, I'm thinking about investing some money into this company. And I said, if you want to do that, fine, you're welcome to do it. And so he tried several days to do it on his phone, on his app. And he finally did it. The first day, he made like 1.5%. And he sent me a text and said, this financial advising stuff is easy. And he was just cutting up with me. And I said, I can't remember exactly what I said, but something like, grasshopper is learning. You'll become a sensei when you know how to sell that stock. And so he said, I get you, I understand. But again, investment planning, it's just one of the 5 areas that we talk about on the show all the time: income planning, tax planning, healthcare planning. Then there's legacy and estate planning, and then of course there's investment planning. And honestly, Ben, I've said it before on the show, we probably spend less than 20% of our time here on the investment planning. That's because we outsource the professional money management for our clients. I don't sit in front of a computer doing the due diligence, the necessary due diligence on the companies or the positions that that we provide our clients. My value is not to do that. That's why we pay somebody who's laser focused, a professional firm, to do that. We spend the other portion of our time doing all of the other things that really move the needle. So a lot of time on income, a lot of time in taxes. So, we want to find out if people that we meet with are giving away more in taxes than they should. It's super complicated. And the government wants it that way. They really do. And if you don't know that the government is playing a game with us from a tax perspective, then you're probably losing that game. So, that taxes is a big focus of what we do. I'd also probably mention, risk mitigation. How are you taking the amount of risk that's right for you? Probably not. Most DIYers that we see, they're only focused on returns, and they don't really realize the downside exposure that they are subjecting themselves to.
Yeah, there's no question about it. And that's a funny story, especially the part about selling, because that's, again, whether you're up or down, it's nothing until you've actually pulled that trigger and sold and completed the trade. So I know, look, even these experienced investors too, they face a lot of challenges they don't anticipate, right? Beyond just the different areas that you work on, there are some challenges. So what are some of those blind spots or mistakes maybe that you see that even smart DIY investors tend to overlook?
The obvious thing that I jump to usually is a lack of diversification. Most DIYers fall in love with a couple, one or two different funds, especially inside of a 401k. They're going right to, for instance, say the Russell 2000 that's done really well recently. And so people, they're piling all their money into that. So I would say lack of investment diversification is the first one. But of course, almost every DIYer that I've ever met, they fail to address taxes. Not all of them, but most of them. Every once in a while, you'll find somebody who has calculated taxes and are taking that into consideration. So that's obviously tax is a big thing. But I would say probably the number one thing that every DIYer overlooks is their emotions and how that comes into play at different times. But the stats tell us the number one reason that the individual investor tends to underperform a professional money manager is their emotions. A professional money manager is not emotionally attached to that money. So the individual person, just like my buddy that I mentioned earlier, they don't know when to buy and when to sell. If my friend could have figured out the app on his phone 3 days earlier, he would have bought 3 days earlier. He didn't, so he bought it on a day the market went up, and I could pull up that particular bank stock that he wanted me to buy, and it's down since he bought it. But that's fine. He's not putting a lot of money in there. He's just trying to roll the dice on one little thing. But I posed the question, when are you going to sell? And he has no clue. So again, our emotions get in the way. We all know what to do: buy low, sell high. But man, it is so hard to do. And time again, we see people do the exact opposite. They buy in while it's high, and then at some point they have to figure out what their strategy is. Do I just hang on to it, or do I wait for it to go back up? And the professional money manager knows, they have a strategy on what they're buying and what they're selling. Hey folks, Lee Perkins here. I wanted to tell you about our brand new book called Next Phase: How to Retire in a Year or Less Without Regrets. It's all about helping you prepare for the next phase of your life, whatever that looks like for you. So, if you're ready to make the most of your next phase, or if you're already retired and aren't sure you're doing all you can to get the most out of your retirement, then you'll want a copy of this book. All you have to do is text Next Phase to 478-475-2050, and we'll send you a copy right away. You can also access additional resources and register for one of our upcoming workshops at our website, www.myretirementclarity.com. Thanks for listening. Now back to the show.
Yeah, I think that lack of diversification that you mentioned and emotions, even if someone's done a really good job for a long period of time, it doesn't take a lot, Lee, to turn that around and lose a lot of what you worked on, right, if you aren't prepared.
Exactly. Yep, you're 100% right.
And you mentioned taxes, too. I want to remind people as well, I know you always talk about taxes is something you help with, but this is a great time to remind people about your book offer and kind of how you can help them there with that free tool.
So we've got a book. Our most recent book is called Next Phase: How to Retire in a Year or Less Without Regrets. And wheat taxes is one of the things that we discuss pretty heavily in there. We are in an environment right now that, like him or hate him, President Trump he's going to do everything he can to extend the tax cuts. I'd say maybe there's a 50-50 chance that he does. Maybe he doesn't. I don't know. At some point, he will not be president anymore, and politicians will revert back to what they will do, and that's spending our money. So if you want to be prepared for whatever happens in the future, especially from a tax standpoint, you can grab a copy of that book. Just text Next Phase to 478-475-2050, and we will shoot you a copy of that book.
All right, so another aspect of this is that, investors like Bob are on top of things when they're engaged, right? And they have time to stay on top of it, just keep an eye on it, manage things actively. But when life changes or as you get older, right, you're going to need to be prepared for the day when you can't stay on top of it as actively, right? So how should these experienced investors plan for the future where they might not be able to do this?
Yeah, that's a really good question, and one that a lot of people don't take into consideration. So if you're a DIYer, you need to ask the question, who's going to do all this when you can't do it anymore? And frequently I will ask that question when I'm in a room and I've got a couple there and he's handling everything because he's a DIYer. She's just got all of her trust in him, but she's uninvolved. And it could be vice versa. It doesn't always have to be a male who's a DIYer. It could be a female too. But what do you do? What happens if you die suddenly? To me, this is not when you want your spouse who's been uninvolved in this whole process to go and try and find somebody that they trust with your life savings. At that point, they're really vulnerable and they can be taken advantage of, and you don't have to start a new relationship at that point. So don't put them in that position. I know most people think you're doing them a favor by handling everything, but you're really not. You're setting them up for some tough times if you don't address this early on. Now, if you want to teach your spouse some of what you do, give them names of people to call, you can do that. But boy, it's still not as good as having somebody that they know and they trust way ahead of time before that happens.
Yeah. All right. So I think that one of the last things here is part of this question and trying to get to an answer. Some people will push back, Lee, that, hey, look, advisors are just picking funds. They're charging fees for something that I can do myself. So what would you say to someone like Bob, who may be a little bit skeptical about what an advisor can truly offer if they can actually truly improve their financial situation?
Here's the deal. I mean, at the end of the day, I don't know if we can outperform Bob. I'm pretty confident that we can because we're not going to be emotional about things. But I don't know that for sure if we're just looking at performance, because the stock market, that's the one thing that we have the least amount of control over. What I do know is that we're going to give him the best chance of the highest returns possible based on the amount of risk that he and his wife are willing to take. We're not going to guess at things. And so at the end of the day, we bring a ton of experience to the table. And we've seen a lot of things that Bob he's never considered before. Are we smarter than Bob? I don't know that either. He's got an MBA, so he sounds like he's a very knowledgeable guy. But you don't know what you don't know. And at this point, it does seem to me, based on the question that you read early on, that Bob is really sort of zeroed in on just the investment portion, and he's missing out on all the other stuff that really moves the needle. And so there's a lot to take into consideration, and maybe I'll close this out with one final thought here, Ben. Hopefully I'm not rambling too much, but another thing that we do, and it may be the number one reason that people hire us, is we just take care of things so they don't have to spend the time doing it. Most people that we meet with, they don't want to spend the time learning how to do all this. They want to make the most of their lives, and so they want to do the things that they enjoy with the people that they love. And so it's about time. And eventually we all learn that our time is way more valuable than our money. It just is. And so some people are just later to the party in realizing that. And I've never met anybody on their deathbed that said, man, I wish I would have bought this company, or I wish I would have sold that company. It doesn't happen. So we want to help everybody that works with our firm really have more time to do what they want to do.
Well, how much would that kind of first meeting with you guys help a situation like this, Lee? So someone goes to talkwithjlp.com, finds a time that works for them, and begins that process. What can they accomplish out of that first meeting to maybe change their mind on some of this?
To the talkwithjlp.com, it is basically setting up a 15-minute phone call. And that's internally we call that a pre-discovery phone call, because I want to pick somebody's brain and learn a little bit about their situation for the number one reason of knowing if I think I can help them. Now, if somebody sets a meeting and calls and wants to discuss Bitcoin, I'll talk with them for a few minutes, but I'm probably not going to be able to add a whole lot of value. But if in that short conversation, I think I can add value to them, then we'll have them into the office, and then we will dig deeper into their situation. We'll gather a little more information, and we'll plug everything into our financial planning software. And we're going to give them a glimpse of what life looks like if they make no changes. Then we're going to show them some of the blind spots that maybe they don't know about. And then at that point, we'll sort of reach a mutual agreement of how we think we can help them going forward. And we don't charge to do this. I want to prove our value to everybody that we meet. And most of the time, people see the value after they go through that process. So it's pretty cool to see people start to understand, man, we're missing out. We need to be a part of what you guys have going on.
That is pretty cool. All right, talkwithjlp.com, best way to schedule a meeting. You can also visit myretirementclarity.com, learn more about J.L. Perkins Wealth Management there. Their office is there, of course, in Macon, Georgia, but working with people all around. So if you have questions, we'd love to hear from you. But if you haven't, please subscribe to the show as well. And Lee, we appreciate your time as always.
Good stuff, man. Thanks. Hey there, Lee Perkins here. If you're like a lot of folks, you've been listening to this podcast for a long time now. But I've got an important question for you. Have you implemented any of the ideas that we've discussed on the show? If you haven't, what are you waiting on? You know you're not getting any younger. So here's my challenge. Don't just consume the content. Our number one goal for this podcast is to help you close the gap between what you know and what you implement. So if you're ready to implement, take that first step today and visit www.talkwithjlp.com and schedule a 15-minute phone call with one of our advisors, and we'll help you close the gap between what you know and what you implement so you can enjoy the next phase of your life. Now is your time. Don't procrastinate any longer.
Investment advisory services are offered by J.L. Perkins Wealth Management, a registered investment advisor and insurance agency. Information is for illustrative purposes only and does not constitute tax, legal, or investment advice. Always consult with a qualified tax, legal, or investment professional before taking any action.